The text messaging part of Grower's Edge is very handy because every day I'll receive a text that shows me where the best local market is.
That's what I like about Grower's Edge too. It gives me the information I want on my smartphone so that if I'm not in the office, I still get the information that I need.
Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is Wednesday the 26th, and we had the market trading lower here today. Let's turn over to the grain hedge trading platform and see where we close off the day. Corn trading down 3 3/4 cents, soybeans down 9 3/4 cents, and wheat in Chicago here trading down 3 3/4 cents. Now we talked about this a little bit yesterday. We were really feeling that based on the way we traded, based on what's going on in the outside markets, that it's likely we see a little bit more selling pressure here today. So let's turn over and take a quick look at the charts and see what sort of damage is done. First thing we'll take a look at is, of course, soybeans. You'll notice soybeans back on Monday traded down sharply, was able to bounce back from the lows, closing on the upper half of the trading range. This chart here, this is a daily chart, and this is available on the Grain Hedge Standard Trading platform. The nice thing about this platform is that it's linked to your quote board. So you don't have to build these charts every time you want to look at them. All you have to do is click on a commodity and it's linked right to it so you can view the daily chart. So let's go back to kind of what I was talking about. First of all, on Monday we traded down, we rallied back. On Tuesday we filled the gap. So yesterday we moved back up, we filled the gap. That was a significant resistance level, as oftentimes it is, and we ended up closing down near where we opened. And today we get more continuation to the downside. I wouldn't be surprised to see this trend continue. There's a number of reasons why I believe that it's likely to continue. First off, weather seems to be relatively favorable in the 8 to 14 day forecast. It looks as though there's going to be above average moisture in the northern part of the grain belt and also in the eastern part of the grain belt. So that to me seems relatively positive as we move through the grain filling time period. Secondly, for soybeans in particular, the USDA forecast was in line with what Pro Farmer found when they conducted their tour, scouting many fields throughout most of the Midwest. Basically, their yield estimates are in line with soybean yield estimates of the USDA, and to me that's a bearish factor. So then you throw in China. China was able to somewhat stem losses here last night, but still they ended up closing negative. Not nearly as negative, but still down over 1% in the overnight session. The concern here is, of course, Chinese demand. If there is some serious situation over there in their economy and their economy slows more, the question is, will China soybean demand, which is a huge component of the U.S. balance sheet, will that be as strong as the USDA forecast in August? And I would submit that it probably will not be. So in general, when you look at this, I wouldn't be surprised to see more weakness out of soybeans in the weeks to come. When you look at corn, similar situation. We haven't seen as much weakness out of corn. I think a number of those reasons. First of all, China is not a major consumer of U.S. corn. Second of all, we have a situation where we have Pro Farmer estimating 4 bushels below the USDA estimate. That's a little bit of a bullish deviation between forecasts, and to me that's another reason why corn seems to be kind of hanging in there. But keep in mind there is support down here. Wouldn't be surprised if we try and test it. It most likely will hold, but I would be concerned when you look at this and you look at the weather going forward. There doesn't seem to be any sort of risk of early frost threat, at least as of now. There seems to be ample precipitation in the forecast, and so those things will most likely weigh on prices. But in general, I do think corn is going to show relative strength compared to soybeans here in the weeks to come. Let's talk a little bit about the weekly ethanol production numbers. You'll notice that this week we did decline 13,000 barrels per day down to 952,000 barrels per day. So a little bit of a decline there in weekly production. This is typical for this time of the year. We are still 87,000 barrels over the 4-year moving average for this week in the marketing year. And we're 39,000 barrels per day over what we booked last year, what we produced last year during this week. So production still is strong. We're about 4.5%. When you look at cumulative ethanol production, we're about 4.5% over what we saw in 2013. So in general, ethanol continues to be strong here despite a little bit of a decline week over week. When you look at stocks did increase 67,000 barrels this week, up to 18.63 million barrels. Now tomorrow morning we will be getting export sales out early in the morning. We'll be writing about that in our morning commentary, so make sure you do stay tuned. You can go to AgWeb to view that. You can view it on our blog, or there's a number of places where you can view it. So if you have any questions about it though, please give the office a call. The number is 877-472-4607. But let's just go over some of these expectations. For old crop corn, analysts are expecting between 50,000 metric tons to 250,000 metric tons. For soybeans, anywhere between no sales to 150,000 metric tons. Analysts are expecting for wheat to be somewhere between 225,000 metric tons and 400,000 metric tons. Expectations for corn and soybeans in the new crop are a little bit higher here. Corn expecting 450,000 to 650,000 metric tons, and soybeans between 600 to 900,000 metric tons. Other than that, guys, that wraps up today's show. If you have any questions about what we talked about today, please do give the office a call.